Welcome to Under the Hood, your fortnightly insight and recap into accounting's leading topics and practical insights. Brought to you by Accountants Daily.
G'day and welcome to this episode of Under the Hood, brought to you by Accountants Daily. It's great to be with you. And if you're new here, a very warm welcome. My name is Carlos Tse. I am a graduate journalist with Accountants Daily, and I'll be your host for today's episode. Today, I'm joined by James Scott, founder of JD Scott & Co. James has worked across small firms and big firms, the Big Four corporate advisory roles as well, before launching his own small business, a cloud-based accounting and advisory firm, focused on helping businesses grow with practical, people-focused advice. James, welcome to Under the Hood. It's great to have you on the podcast.
Thanks. Great to be here.
Amazing. In this episode, we'll be speaking about small business, as that's your expertise. We'll be talking about AI, a little bit about the budget, and the people strategy that you've got over at JD Scott, which is
awesome.
I found really interesting. But before we go into all of that, James, would you be able to tell us a little bit more about yourself and how you got to where you are right now?
Yeah, absolutely. So, I've been, I can say this now, I've been an accountant since last century. So I graduated from uni back in 1999 and joined a small firm based in Melbourne, where I grew up. It was traditional SME market style businesses. That was really interesting. And then over the years, I sort of progressed through the firm. So I went from there, went to BDO Melbourne for a while, worked in the insurance division there. I moved to Sydney in the early 2000s. I spent some time at Westpac, and then back to BDO Sydney, and then shifted gears in about just before the GFC. And I went to EY and I took up a technical accounting role. So our role there was to help both our audit clients and our external clients interpret accounting standards. And that was a really, really challenging role. And we got to do some really, really interesting work over the years there. Got to director at EY, decided that partnership track wasn't necessarily for me at that point in time. Opportunity arose and I wanted to work for QBE and ran financial reporting at QBE for a couple of years. And again, working head office, working at what was then a top 20 ASX company, multinational, very, very interesting business and lots of challenges. Did that for a couple of years, then moved into the capital area, so helping manage the group's capital, which again, for an insurance company is massively, massively interesting stuff. So it was really technical stuff. You're dealing with the board and the C-suite daily. And really, really enjoyed myself. At the start of 2019, I left there. I took some time off, and sort of one of those pivotal moments in career. Just like, what do I want to do next in my career? And so I ummed and ahed for a while. Took a few small contracts. Wasn't sure what to do. And by the end of the year, I think I'd always wanted to start my own business. Even right back as a kid. So I said to my wife then, I want to start my own business. And she sort of looked at me funnily because at the time we had, got the mortgage. We had I think a 9-month-old, an 18-month-old. She wasn't working. And she goes, "Are you sure that's a good idea? Given where we were." And I said, "Oh, what can possibly go wrong?" And so I launched the business in end of February, start of March 2020. Just as COVID hit.
So what a time.
So what could go wrong? Well, global pandemic, first one in 100 years. It couldn't have got any worse. So the good news was we couldn't fall any further. It was only uphill, up from there. So, and after the first 6 months, we got some clients. We started building out, a client base. We were doing work. Yes, it was all from home at that point in time. And so, built the firm up to where it is today. And we're about 10 or 11 people. We've got offices in the Sydney CBD. Some great clients. And so that was the journey over the last almost 6 years now.
Amazing. What a journey. And you've really come a long way. What sort of small market, I guess, area were you hoping to fill with this small business?
Yeah, look, for me there was a couple of drivers. I started out in a small firm in Melbourne, 4-partner firm, doing the SME market, high net worth groups. I'd always really enjoyed that. And while a lot of the work I did at EY and BDO and indeed QBE was great, really technical, really interesting work, exposure to things that most people don't get exposure to in their careers. I sort of always felt like I'd want to get back to helping proper businesses, real businesses, achieve their goals. And that was the kind of driver of setting the firm up. At the end of the day, it was like I want clients to almost appreciate what we do. Not that other clients, not that my big clients don't appreciate it, but that you get a lot closer to the action with a small business owner and helping them achieve their goals. And that was a driver at the end of the day.
Right. And was this sort of like an idea that came to you, obviously over time, but was it like an epiphany moment where you're like on the beach sitting down and just being like, I want to start a small business?
Yeah, almost. I think like I've always had the itch, right? I've always wanted to try and build something. I did a lot of triathlons there for years as well. And people go to me, why'd you do it? So, well, just to see if I could. And I think that was the kind of point, right? Like as I was early 40s when the whole thing kicked off, it was really a case of, can I do this? And I think I hate living a life without, I'd hate to get to the end of my life and have regrets about something I didn't do. That's always been my worst thing. So at worst, it would have lasted a year or two, failed miserably. I'd go and get a proper job, or it was going to take off. It was one of the two things. And so fortunately for me, it's growing. We're still going. We're doing well. And so that was, it wasn't an epiphany per se, but it was just an opportunity arose. Sometimes life gives you, an opportunity to do something. And I do remember at one point walking out of an interview at one of the financial institutions I was interviewing for, and I walked out of the interview and I said, I thought to myself, I can't do this. I've worked in big corporates before, and I actually don't suit those sort of businesses well. My personality doesn't suit it well. So I was like, well, I need to do something else. And so let's start my own business.
I guess there's a level of burnout there. I did actually read your Substack post
today. The one I did about an hour ago.
and it seems like the ones starting small businesses may be running away from, the bigger corporate ones.
Yeah, some are, absolutely, yeah.
But also they experience it even in their small businesses. I guess...
I think the burnout's different though. Like just to touch on burnout as an issue. I mean, we all go through ups and downs in a small business, but you accept it, right? Because I think the difference is you're in control. You're responsible for absolutely everything in your business, but you're also in control. So I think that mitigates it compared to burnout you get in roles where you're just part of a big machine. And so it's definitely a different thing, but I think for a lot of small business owners, it's sometimes just that weight of being responsible for everything, and at the same time can be a bit much. And so, I wrote the post this morning, more just to say to people, look, we'll go through it. You're not alone. Everyone does it, right? And everyone's been there. No one else will get it apart from you, but it does end, right? Everything's got its finite endpoint. That's an important point to remember.
I think that's a really important message, especially for the ones who feel like they're drowning and there's no support around and no one's going through what they're going through as well.
Yep.
One of the, specialities that JD Scott focuses on is succession planning.
Mm-hmm.
We did speak previously off the podcast about how communication is a key thing that sometimes is the issue there. Could you expand more on that?
Yeah, absolutely. So we do a lot of SME clients and also a lot of high net worth family groups as well. That's kind of our key market. How that wealth is sometimes accumulated over decades, and indeed businesses that are built over decades, how that's transferred to the next generation is always a critical thing. And so making sure that all parties involved understand the various ins and outs of how that's going to work, where the levers are, who's doing what. We've seen plenty of clients, and I've got plenty of people I know where one sibling works the business for a pittance for 20 or 30 years, thinking they'll take it over one day. Other sibling goes off and has a career of some description. Business gets transferred, and then second sibling wants their fair share, in inverted commas, and first sibling's like, but hang on a sec, I've been working for nothing for 20 years here. I deserve more. And so they're the sorts of tensions you get. And so good communication is critical in making sure that happens throughout that process, and communication over time, because you don't want the tension to blow up post sale of the business.
Right. And I guess would that entail constant record keeping and making sure that everything's set up and ready so that these conflicts don't happen?
Yeah, it's probably more than just the records. It's sitting down around, literally around a table and talking about it, right? What is everybody's expectations? What is everybody's ambitions in life? People's ambitions in life change. One thing I tell all my clients is really important to do is when you're in a situation like that, everyone should get paid a fair market salary. If you're the sibling, if you're if you're the son or daughter of the owner, for example, and you're doing, I don't know, a COO role, Chief Operations Officer role, or even a CEO role in the business, you should get paid like an external CEO or CEO, right? That's important because you get paid for the role you're in. That separates out the equity and the value of the business from the actual role itself. And you don't run into the situation where someone's been working in the business for 20 years getting underpaid because they're the child, and then the other child getting their nose out of joint. Okay, so that they're important things like that and making sure everybody understands where those pieces lie.
Right. This is a really human issue, I think.
Absolutely, yeah.
That was
We're
really...
more than just spreadsheets, right? So
Yeah, that's very true. I'm speaking with James Scott from JD Scott & Co. We were just talking about succession planning and best practice and what accountants and people involved in succession planning can be doing. We'll be right back after this break. Welcome back. You're listening to Under the Hood, an Accountants Daily podcast. My name is Carlos Tse, and I'm speaking with James Scott from JD Scott & Co. And we were just talking about succession planning before the break. And I did bring up the fact that it's a very human issue. But on that topic, we did talk about your hiring strategy. Now,
Absolutely,
would you be able to divulge a little bit more into that, James?
Yeah, absolutely. I mean, look, to be blunt, small firms like mine struggle to attract the right level of talent. Especially at the lower levels, as in the more junior levels. The big firms offer, better prestige. I say to anybody who wants to be an accountant, get a Big Four name on your CV at some point, because that's a badge that you. Even today, people look at my CV and go, "Oh, he worked at EY for however many years it was." Like, you've got that, right? You don't need to then prove yourself, I suppose. So, for everybody, having a big firm on your CV is helpful from a career perspective. Having said that, though, yeah. So we've always and there is a lack of quality accountants globally. It's not just an Australian issue, right? It partly comes down to the market, salary and wages, that kind of stuff. It comes down to professional services getting sort of squeezed, how they're getting, how the world's worked. And so I've always taken a different approach to my hirings. The first thing I've did and done, and we still do time to time, is hire part-timers. Over the years, we have some great part-timers. Mostly mothers who've come back to the workforce after a couple of years out. They're great. Like, they're often they're highly skilled, but they don't necessarily want to have career ambitions to build big careers, but they've got really good skills. They've got the experience and the maturity to go with it. And we're flexible enough to be able to offer them 3 days a week, 4 days a week, work from home, that kind of stuff, right? So that's kind of been one strategy which has worked really well for us over the years. The other strategy we've done over the last 12 or 18 months is, and I've looked to hire a lot of graduate accountants, and I've just never found the right people coming through. So we don't hire accounting graduates anymore. I've always, if you go to the UK, for example, right, nobody in the United Kingdom does, not nobody, but almost nobody does an accounting degree and joins a big firm. They all do degrees in philosophy, engineering, science, mathematics, you name it, anything but. All right.
Yeah.
Accounting can be taught. Absolutely, right? And so my last couple of hires have been, one guy's got a marketing degree, one's got a psychology degree, none of them are actually accountants.
Yeah.
On the basis we can teach this stuff, right? Accounting, it can all be taught. So we hire the right people to start with, okay? And once you've got the right materials, and that's, what are the right materials? Ambition, willingness to learn, and EQ. right? And so if you got those three pieces, I can teach you what you need to know about accounting, what you need to know about tax, and then develop them from there. And so that's been a really, really fruitful way of doing things for us. And I think other firms are starting to, I know the big four firms are starting to look at this, the mid-tiers, but a lot of small firms absolutely look to hiring, if you're going to hire a grad, look to hiring someone who's not an accountant. There are lots of really great people out there who can do really well in your practice.
Wow, that's a really great perspective, and it's cool to see it crossing the waters over to the Australian shores. And your company also has started its AI transformation as well.
Yeah.
How has your mindset sort of changed over the years, and how has that mindset changed really helping your business at the moment?
Yeah, it's funny. I first bumped into ChatGTP, must have been like January 2023, like really early on in the piece. I think I was on holidays and read a Fin Review article over like the Christmas break and thought I'll give that a crack. I've always loved experimenting with, and using software and tools, whatever. So we've always been doing that sort of stuff. And the guys will tell you I'm forever bringing out new tools, and I had to slow myself down sometimes. Said, hey guys, we've got the process to fix. So everyone's eyes rolls. So ChatGPT was kind of interesting. It was helpful, but it wasn't a game changer. Claude, which was released, and again, I probably put that in place about January this year, maybe February this year, right?
Okay.
Was an absolute game changer. It is fundamentally shifting what we do. And I'll give you some examples, right? Claude, Excel is an absolute godsend for accountants. The ability for it to build a financial model in 5 minutes flat without me doing anything is just staggering. It has taken so much of the grunt work out of what we do. All right. I can dump into one of our drives. A client gives me 50 donation receipts, for example. You dump it in and go, dear Claude, please check all these. Do they meet the DGR requirements for deductibility?
Yeah.
Spits out an answer in 5 minutes at you, right? That's astonishing. Okay. And so what it's doing, it's getting rid of all the work, unfortunately, for the juniors, what the juniors would have done, a lot of that crunch work, which is beneficial because it means we can focus on proper client issues. The second thing that we've managed to do too is build our own tools. All right, I'll call them non-mission critical stuff. Right, I don't think you're going to replace Xero anytime soon. There's too much mission critical stuff within that, too many risk controls, or MIB or QuickBooks, that kind of stuff, right? And the way they link to the ATO, none of that's going to get replaced very easily because there's too much security needed around that. But we put an L&D tool and learning development tool. Right? I couldn't find what I wanted, so I got Claude to build it. Right? I knew nothing about programming at all, and we built a tool and deployed it, and we use it regularly, right? And so that is astonishing to me. The cost of building software is now almost nil, because if I can do it, and in date, I've got our ops guys, Bella and Henry, to start and helping tweak this stuff. If they can do it, then the value from software providers is now down to your solution provision and your UX, and even UX is getting to be to the point where Claude can do it for you. So, yeah, it's an astonishing, and this is only in 5 months, right? Claude is just, and whatever comes next, leaps and bounds are going to change things. So at the moment, it's hugely beneficial for us. It allows us to focus on client issues a lot better. But then it goes right round, and again, I was saying back to my hiring policy and who we're getting on board. The best accountants going forward will not be the ones with the highest IQs and the best ability to run a spreadsheet. The most important attributes going forward are EQ. Can you relate to your clients? Can you think about your clients? Can you think about their needs before they need it? That's the most important thing going forward, because the value of that, so checking the numbers in the spreadsheet is now zero or close to zero.
Yeah.
So it's really critical.
And I guess, obviously with AI, AI makes mistakes sometimes.
Yeah, of course.
Keeping a human in the loop, is there a level of expertise that's needed for a staff member to be like, okay, that's wrong? Obviously a financial background.
Yeah.
Checking the AI's work, could that be delegated to a junior?
So there's two things I always tell my guys about using AI, and we are encouraged to use within the firm. The first thing is, don't let it write your emails for you and your other client materials for you. Okay, don't let it lose your voice, steal your voice. Okay, if AI steals your voice, it writes in how it wants to write stuff, and it's pretty easy to peg something's written by AI. You have to keep the human touch. I don't do this deliberately, but my wife's always picking out the whenever I put a post up, the spelling mistakes in my posts. And I say to her, well, this proves that AI didn't write it because AI doesn't make spelling mistakes and I do, right? So there's one, right? But the way you term things, the way you write things, even the volume of what you write, it's critical that humans write their own stuff because it brings that human touch to things, right? If an AI can write it for you, what's the point of having it?
And clients can kind of see through that.
Absolutely, clients can see it through, right? That's the first thing. The second thing, and you're right, absolutely, AI makes mistakes all the time, right? And in fact, but the benefit for someone like me and indeed, more senior people who've been around the traps a few years is what doesn't seem right. If AI gives you an answer, if it feels right or not, usually. Okay, and so for us, it's leverage because you can get faster answers out of things. You can get to look up references a lot quicker. You can tell us pretty, confidently it's made a mistake and pretty well. The problem for the junior guys is they don't know what they don't know. So you still need the experience. And as you said, you can't rely on it. There are things you can do. For example, our internal policies say if you're looking up a tax question, restrict it to ato.gov.au, it's the Australian tax website only, or maybe the big four firms.
Okay.
Get references for everything. There are ways of tightening it up so it doesn't go off and find some weird answer somewhere. But ultimately, you can't give it to juniors to check stuff because they don't know what they don't know, and they still got to learn a lot of things. And this is part of like our philosophy is training staff all the time because, and we do a lot of training, a couple of hours a week in professional development, so that they know what they know.
Right. Yeah, there's a lot there. The importance of EQ, keeping a human in the loop, and AI governance as well. I'm speaking with James Scott from JD Scott & Co. He's the founder. My name is Carlos Tse, and we'll be back right after this break. Welcome back. You're listening to Under the Hood, an Accountants Daily podcast. My name is Carlos Tse, and I'm speaking with James Scott, founder at JD Scott & Co. We were just speaking about JD Scott & Co.'s hiring strategy, hiring non-accountant professionals and also part-timers. And we were talking about AI as well and how small businesses can best approach that. And I saw your LinkedIn post at 5:16 a.m. The day after the budget.
Oh, that was bad, yeah.
Initial reactions annoyed.
Okay. That's true, yeah.
So you did mention that the CGT changes are going to hurt small businesses, hurt medium-sized businesses. What are your thoughts?
Look, the budget was two things. Taxation of trusts and CGT changes have always been coming. Like if you go back in Treasury over the years, they've always been proposing these things. So we knew at some point it was going to happen, right? I think my disappointment, indeed my annoyance, is driven by a couple of different things. The first one, it's been sold as intergenerational, righting the wrongs of intergenerational taxation, effectively, right? Taxing capital heavier. But the problem is there was no relief for PAYG earners. So, if you think about the three sort of things you could tax consumption, you can tax salary and wages income, and you can tax investment income. Right? I have no problem leveling the playing field with investment earnings versus salary and wages, none whatsoever. My beef is that I guess maybe what I expected would have been a proper tax reform and proper intergenerational, fairness would have said, let's up the GST, 15%, whatever, okay, consumption tax, because there are lots of people out there who don't pay tax, right? Yes, they're mostly retirees and others, but there's lots of people who don't, and their taxation is through the GST. So you up the GST. You increase taxes on, as I've done on CGT and trusts and whatever, and I'll come back a few points on that in a second. But on the offset is you massively up the top marginal rate to, 400,000, 500,000, something like that. Like our top marginal rate kicks in globally at a very, very low level. All right. And so for young people like yourselves and my staff, they're still struggling to save for a house. That's not helping things. All right. Because they've got, so much of our salary and wages goes on tax. And so much of what the government as put forward as proposals for the $250 offset, for example, by the time that comes through, will be eaten up by inflation. Okay, so we're all getting financially poorer. And so having a quid pro quo there was what I was kind of expecting, and it didn't happen. All right, so that's issue number one. Taxation of trusts, I don't have a problem with that per se. I guess the thought or the hope there had been simply for an accountant like myself and tax people, simply bringing the trust into the franking credit regime. So tax trusts like we tax companies.
Okay.
That would have been a pretty simple change, relatively speaking. And the Prime Minister announced yesterday that they're having trouble with legislation for trusts, funnily enough, because it's extremely technical, right?
Yeah.
And so if you just brought that into like trusts and companies, it makes no difference. Again, I don't think anyone had a problem with that. Franking credit flow-throughs, all that kind of stuff. One of the things the government's trying to do with the trusts situation and bucket companies, for example, is they are going, and indeed there was an article this morning, the Fin Review, about Big Four structures and the sort of stuff like the partners use there. They're going after structures they know they can't legislate away very easily. All right, and so this is a sledgehammer to solve a little problem with lots of unintended consequences. CGT, again, interesting. The government's failed miserably, I think, to actually deal with house prices through this. I mean, if you read the budget papers, house prices will increase by, was it 4%? It's a tiny amount. You want to make housing affordable in this country, it's going to have to fall by 30%. Right, that gets you from, if you read the numbers, a 30% fall in house prices gets you back to high, but not extreme levels, if that makes sense. Right, they're not cheap, but they're just not, globally speaking, they're not extreme where they are at the moment. So it's going to do nothing to reduce house prices. And even the Treasury has admitted that. Secondly, the problem is the CGT changes don't differentiate between capital that has been built by a business owner, right, active capital, and passive capital. So I invest, money in BHP or a house and sit on it for 30 years and sell it. Yeah, that's a passive asset, right? And yes, I've reaped the reward of some financial risk, but ultimately, there's no reason that should be tax differential to selling wages necessarily. There's a massive difference, though, between what are termed active assets. And again, the reason I raise this like this is all in the tax legislation. This is already there. This is really simple to make these changes, okay? You take an active asset, a business, it's well defined already, small business CGT concessions deal with these issues, and you say to business owners, we'll change the thresholds, okay? Now, at the moment, you fall out of the CGT concessions for small businesses at $2 million in revenue. That number hasn't shifted in decades. Oh, God knows how long it's been there for, but it's never moved. So, and the reason I say this is a lot of small business and even indeed medium business owners, they've taken massive financial risks, taken massive personal risks, right? What the Prime Minister and the Treasurer and others that don't see are, the business owner who's got 30 staff but is awake at 3 a.m. wondering if the invoice to get paid to make payroll that day. They don't see these 60-plus hour weeks. They don't see the hours on the weekend. It's not to say PAYG owners don't work hard. They do, absolutely. But there's an extra level of risk, that a small business owner takes. They don't get paid for years. They underpay themselves. They're taking a massive financial risk. And it's what builds the economy, right? We talk about a productivity crisis in Australia. Well, this is doing the opposite of productivity because you need the small businesses to be more productive, to do things better, to drive the economy to grow the pie. Right. And so I think the government could have quite easily have taxed just passive assets. And I probably wouldn't have had a problem with that. I probably could live with that. While either excluding what we term active assets like a small business or even need a medium business, or bringing in rules to like up the small business CGT concessions to, 20 million in revenue, 50 million in revenue, something else, right? So that's the kind of, and that's why you're seeing all these memes of the Prime Minister joining people's businesses because, the small coffee shop that turns over, $700,000 a year, makes the owner $100,000, they buy it for whatever they sell it for something else 10 years later. Yeah. That gain, half of that gain now goes in tax. That's a lot, a minimum of 30%, Yeah. The likes of yourselves and others, my kids who are, who if you buy some BHP shares or Telstra shares and or you learn about the stock market, your gain is now taxed at 30%, even though if your marginal rate is not anywhere near that, or sorry, I should say effective tax rate is nowhere near that. There is a misunderstanding in the community about marginal rates versus effective rates. That's the other thing too. It's very easy to, obviously we've got tiers of rates going up, kicking at different levels. But the question isn't once you tip over to a level you shouldn't care about it. It's how much it's your tax over your total income, right? What's that as a percentage? That's your effective rate. And that's the important number to worry about.
Yeah.
And so it's the problem with all good numbers. It's very easy to mislead people. So there's a few problems with the budget. And it appears to be just a tax grab effectively and nothing that will help intergenerational unfairness. And if anything, I think it'll make it worse for younger generations, which is, and again, just a final point, the irony, of course, is when I speak to a lot of my high net worth clients, they're kind of like, well, we're already on top marginals, it doesn't matter so much. It's those that don't have the wealth, right? Testamentary trust, another example, right? They're used for very, very, very good asset protection purposes. If you as an adult pass away and you've got a 20-year-old child or 18-year-old child or whatever, or you want to be able to protect their assets, right, from the future, because who knows what's going to happen. It's those people who are going to get whacked, right? And so it's unfortunately, which I find very bizarre for a Labor government, a tax on, dare I say, people who don't make as much. The really wealthy, again, either find a way through over or under this thing or don't care. They care, but they don't care. Right.
There really is a lot there. And I guess the impacts on small businesses as a result of the federal budget and the changes that are incoming. We've got Payday Super, AML CTF,
it's all happening at once.
all happening at once. What are some, I guess, pieces of advice for small accounting firms in light of all of these changes, it all happening at once over the next 12 months?
I think focus on what you can focus on immediately, right? This is the AML changes. I mean, these are global rules. We can do nothing about it. I know some firms complain about it, but it's a bit more of an impost. But get it in place, get it out the way, get your part of procedure set up, right? The tax changes will be a whole range of work. We don't know. There's no legislation yet as of today, the podcast date, what that will look like. So we can't do anything until that happens, right? I think the message of small practice owners and small accounting firm owners is, don't panic, just keep at it. I would also suggest to small firm owners that, look at your client list. If you've got clients that, aren't A or B clients, if you've got a D or an F client, the person that complains doesn't pay their invoice, that sort of stuff, like it's time to cull some, right? There's more than enough coming down the pipeline thanks to the government that you don't need to deal with clients that don't suit your practice. So, don't ever worry about firing a client. I think that's in some cases more beneficial. And so, have a good hard look at your practice and make sure that you've got the right clients going forward.
Right. Some really brave choices to be made there, James. Thank you so much for your time joining me on Under the Hood today. I really appreciate your insights and perspectives. We did speak about AI, the federal budget, your hiring practices, and your journey to where we are at the moment, and your words of wisdom at the very end. Thank you for your time, James.
Thanks, mate. Pleasure.
Thank you so much for tuning in. This has been Under the Hood, an Accountants Daily podcast. If you've made it this far, I really appreciate your time, and please send me any thoughts, ideas, or comments in the comment section below, and I'll be with you in the next one. Bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.